Good morning, happy Sunday, and Merry Christmas Eve, I suppose. Welcome back to another episode of The Rational Investor. Sundays are becoming one of my favorite days. I go over the portfolio that I opened for you guys to show how the markets work and hopefully make people comfortable with investing and all of that. So, anyway, stick around. We'll get into the portfolio and see how we did this week. So those of you who don't know me, my name is Adam Kahn and I'm the Rational Investor. Welcome back and glad to see you all here. I'm super excited to see how the channel's been growing. We have over 2,000 subscribers. I can't tell you how cool that is to me. I know to the world that's like nothing. There are people who have like zillions of people, but for me it's like so exciting. It's really cool. I think that 2,000 strangers who found the channel and come and watch and chime in. I love the comments. I don't know if you saw my video about the guy who made the comment. Really, I appreciate all the interaction. Anyway, before I forget, on that note, if you haven't already, do me a favor and hit the subscribe button. Also, maybe smash the like button. That helps YouTube's algorithm and people find the channel. So if you're enjoying the content, I really appreciate that help. It goes a long way. So a quick recap, essentially what I did is I put $10,000 into an account. I bought 20 stocks, approximately $500 in each stock. Some of them were a little more, some a little bit less, just based on where their stock price was and the amount of shares we were getting. And we've been watching how it's been doing, and we're on week 5. My timing was unbelievably lucky. I kind of repeat, and I really want to say this, anybody who touts returns like this or anything better, like God forbid you're seeing those posts by Miss Mary or whomever else that I can make 100% returns in a week or whatever the silliness is, those are likely scams. And even somebody who thinks they can make 10% a week or whatever the crazy numbers are, I'd be really cautious about all of that. And it even goes into a little bit of what I talk about with these yield max funds and some of the other stuff. So anyway, real quickly, I'm going to read through the 20 stocks that I picked. Forgive me that I moved the camera a bit. And then we'll go over how they did this week and everything else. So my 20 stocks that I picked for this account, and the reason I picked these stocks is I really felt like it would fit almost any normal size to large portfolio that you could do something similar or like this. I'm a real believer in the Peter Lynch theories of if you pick good companies and stick with them, you'll do well over time. Now I try to tweak that a little bit where I do try to pay attention to price, but to be fair, if I want a company like Amazon, I don't in the beginning. I want to make sure I have some of it. And then if the price goes lower, I might want to add on because I still think they're a great company unless something about that company's dynamics has changed in my mind. Anyway, here's the list. I picked ADM, which is Archer Daniels Midland, Amazon, Best Buy, Bristol Myers, Caterpillar, Enphase, Foot Locker, Google, JEPQ, which is a call covered strategy that from JP Morgan, Meta or Facebook, 3M, Altria Group, Nextera Energy Partners, Pfizer, PFFA is a stock ticker. It's Vertus Preferred Stock Fund. Qualcomm, QSR, which is a quality restaurant group or something like that, or quick serve. But essentially, it's Burger King and a few other fast food restaurants that has a CEO that I like. Starbucks, Exxon Mobile, and Zillow. Those are the 20 stocks. Now, if you give me a second, I'm going to go through them. I'll also show you them. I'll take a picture and put that up at the end as well so you guys can see exactly how they've done and what's invested and everything else. So these are just in order of alphabetical order. I didn't really pay attention to anything other than that. Starting with ADM or Archer Daniels Midland. It closed this week at $71.50. We have a total account value of $429. Our total profit is we're down $14.16, and week over week it was down $25.50. The reason I picked Archer Daniels Midland is they're a food packaging and distribution company. I think that the space that they're in is really hard for another company to come and compete against them. So I think they have a reasonable rate of return to grow over time, and they also give a dividend as well. So next on my list is Amazon. The ticker symbol is AMZN. It closed the week out at 153.27. Our total account value $613.08. Our total profit so far is $32.76, and week over week it was up $13.20. Hopefully, you all know Amazon. I picked them up because I think they're just a behemoth and they're the best of the best at what they do. I think they cover retail. They also have some AI portions to it with Amazon Web Services, as well as your Alexa and all sorts of things to be getting bigger and bigger. I think the name of the company is great because it's like the Amazon and it keeps growing and growing. It's one of my favorite stocks. I'll say that about a few of them, but really, I just think Amazon's a great company and one that I want in my portfolio. So that was kind of my point about, Peter Lynch says just own great companies and you'll do really well. Um, I do try to time the market, but I also don't in the sense that if it's a company I really love, maybe I just want to put 10 or 20% of what I want to put into it immediately because I know I want to own those things and I don't want to miss out because sometimes things are overvalued for a long time and sometimes they're undervalued for a long time. And I don't want to miss out on a company like Amazon just waiting for a correction where I think I can get it at a bargain. And that's kind of my point when I talk about the housing market too. So keep that in mind. It's like maybe it's expensive. I'm not trying to pick a top or a bottom, but if I don't own real estate in the long run, I really want to. So if I pay too much today, I try to do it on a small amount that I can afford to, buy something else as a rental or whatever it is. And I don't just overstretch and put all my eggs in one basket, so to speak. Next on my list, again alphabetically, is Best Buy. Ticker symbol is BBY. Closed the week at $76.42. Our account value is $611.36. We're up $67.36 in total so far. And week over week, we were down $7.20. Now, I don't know that I'd put Best Buy in my list of just things I wanted to own. The reality is, I wanted to put Target in there, but it had already had a big move, which is why I said I do pay attention to the values. But I also thought retail in general was oversold and out of favor. And with the holidays coming up, I thought that was pretty funny timing that retail would be out of favor the way it was. So Best Buy seemed like it was pretty inexpensive. I wanted to pick some up. I assume you all know who Best Buy is. And we'll go on to the next. Bristol Myers Squibb is the one I had next, and ticker symbol is BMY. It closed the week at $52.47. We have a total value of $524.70. Our profit so far over the 5 weeks has been $31.50, and week over week we are up $15.80. Bristol Myers is just a big drug company. I wanted to have some money in that space. I have it and one other in this portfolio. They pay a decent dividend as well, and I just kind of think they're a company that'll be around a long time and slow and steady and continue to grow. Forgive that I keep moving little by little, but the sun keeps coming over. I don't want it right in my face. Next on the list is Caterpillar. Ticker symbol is CAT. Closed the week at $290.36. Total account value is $580.72. Our profit so far for the 5 weeks is $75.50, and week over week it was up $9.24. I love Caterpillar. It's one of my favorites. It pays a small dividend. I actually don't own it in any other of my accounts, and I really wish I did because it's one I've wanted to own a long time, and I've kind of kicked myself, which that's exactly my point. I've been missing out in the meantime, waiting for a price correction, and one even came around and I balked and didn't pick it up. But they're a great company, and not only are they a great company, it's going to be really hard to compete with them. I mean, who's going to open up an industry and start making bulldozers and repairing them and everything else? I just think it's a really hard space for somebody else to get into. I think they're run well and they've been around a long time. So it's just a company I really love. Next on my list is Enphase. The ticker symbol is ENPH. It closed the week out at $133.77. Our account value in the 5 weeks, $668.85. Our total profit, this is the one I think has performed the best of all of them, $201.95. And week over week, it was up almost $50 at $49.25. So the reason I picked Enphase, really, I didn't know about them before. I recently had solar put in my house. I've said this every week. And 3 of the 4 places that I interviewed or priced and everything else, they all went on and on. They make the best components. The funny thing is I didn't end up going with them when I put the solar in, but I heard him say it so much I kind of pulled up the stock and looked at the chart and saw it had fallen from like 230 or $240 a share to 80. And I don't really know what was going on, but I heard the people in the industry saying they make the best components and figured, well, maybe it's just on sale and out of favor. Timing's been unbelievably lucky for it. I also kind of compared it. That's what Meta did last year, and Meta's right back up at 350 something, all the way from like 80 something in the past year. And I have no idea that the earnings in Enphase are that good, but its PE is in the 30s. It doesn't look too overpriced. I just don't know about it as much as Meta, which I thought was like a super, super bargain. So I don't know that it's going to perform as well. I just thought it was on sale. Anyway, so it's done really well, really lucky timing. Next on my list is Foot Locker. The ticker symbol is FL. It closed the week at $30.93. It actually had a big pullback at one point during the week when Nike reported bad earnings. The total account value so far is $680.46. It's up $197.92 and week over week $9.90. What I love about Foot Locker is the CEO that came in a year ago. Her name's Mary Dillon. I actually started picking it up in the mid 30s when she came on because she took Ulta Beauty and really made the company go sky high from not high prices. And I find people who are successful are often successful, whether it's at one company or another. So I'm kind of betting on her and excited to see how it does over the next 3, 4, 5 years, maybe even 10 years. It fell all the way down to $18. I want to give it the time I wanted to give it. It also pays a hefty dividend. I mean, it's paying 40 cents a quarter. So it's like, I don't know, 5 or 6% yield. As long as they can continue to pay that dividend, I'd be thrilled to have it. And if it can actually get some growth, that'd be awesome. Next on my list is Google, GOOGL. And for you guys, YouTube, which is part of why I love Google. I think they're in an unbelievable space. Anyway, closed the week at 141.73 and count value now 566.92. Our total profit is $32.44, and week over week it was up $36.52. I just think Google is like the blue chip of internet stock, not internet anymore, but they've got the search engine, they've got YouTube, they've got a bunch of ancillary products. They continue to grow and grow even despite the size. I really love Google. I think it's a good core holding for any portfolio, um, and that's why I picked it. So the next one on the list is a JP Morgan Nasdaq call covered strategy fund. The ticker symbol is JEPQ, often referred to as JEPQ. It closed the week at $50.22. Total value is 502.20. We're up $12.10 over the 5 weeks and $2.20 week over week. Now, to be fair, I actually sold it in my other portfolios. I didn't want any call covering funds anymore. When I thought about it, it's not something I can't do myself. And I wasn't really comfortable limiting my upside at this stage of my life. If I need the income and I need to shift into more of those products, there's nothing wrong with them. And I think it's good to keep it in this portfolio to see how it's going to underperform the other things if we have an up market. It's done just fine. It's up $12 and we've gotten a dividend. So I think we got, $3 or $4 dividends. So in some ways we're up like $15 or $16. But if you look at it in proportion to the rest of the things in the market, it hasn't in the portfolio, it hasn't performed as well. And I wouldn't say that I picked that phenomenally. The market's had a really good run, and most of the market's up 11, 12% over the past 5 weeks. Next on the list is Meta or Facebook, kind of like Amazon and Google for sure, one of my favorites and something that I think should be in most people's portfolios. Um, Meta closed the week at 353.25. Total value right now is $706.50. Total profit $37, and we were up $36.66 week over week. I love Facebook. Really, I think they're spread into a bunch of different industries. It's Instagram, it's Facebook, they own Oculus. I think they're just going to continue to grow and do wonderful. And even though they've tripled this year, when you look at their PE ratio and their growth rate, I still don't really think they're overpriced. Now, I forgot I should have said it earlier. Maybe I'll do a clip and move it back in. But really, this is not financial advice. You guys need to do your own research. Pick the things you think are important for you. You shouldn't follow me just because I'm some guy on YouTube and talk about this stuff. I love markets, but it's what works for me. That doesn't mean it necessarily fits you. You need to make those decisions, maybe even seek to a financial advisor and see what they suggest as well. But Meta's one of the ones I really like. So after Meta, alphabetically, I have 3M, which is MMM. Closed the week at 106.28. Total account value $531.40. Our total profit is $56.40. And week over week, we were down $3.50. 3Ms, they do post-its and all sorts of medical things and everything else. I think they have over 2,000 SKUs. They had a lawsuit which pushed the price down below 100. If they're able to maintain their dividend at that point, it was over 6%. It's back into the fives. I still think 3M's a great bargain here as long as the lawsuit isn't too big a deal. They caused some damage to some nature in other countries based on, I forget what it was called, but the reality is it was a real lawsuit that has some real problems. Thing is, with these big companies, generally once they get past it, life moves on and they do just fine, which is a great example for the next one who's had tons of lawsuits. So next on my list is Altria Group, ticker symbol MO. Closed the week at $40.38. Our total account value is $444.18. We're down $2.97 for the profit, and week over week we're down $15.07. I think Altria is just fine, and they pay a hefty dividend of like 9, almost 10%. So, those of you who aren't familiar, it does cigarettes, which if you don't want to own that, I totally understand and respect it. So, I'm sure you can find something else to use in your portfolios. Next on my list is Nextera Energy Partners. Ticker symbol is NEP. It closed the week at $30.84. Count value of $616.80. We're actually up $156.40 and week over week $13.60. The reason I say we're actually is I bought that as a dividend play because I thought it had gotten so oversold. I didn't expect it to go up as much as it has. It fell down into the mid 20s and it was paying 15% yield. And the news on it was essentially that they're lowering the rate that they are going to think they can increase their dividend. Well, as long as they can increase their dividend from a 15% yield, to me, that's a steal of a century. Now, maybe there's some underlying problems. Maybe they can't do that. Maybe there's some real risk because part of what I talk about in a lot of videos is the higher the return, the more risk there is. But sometimes, and I'm hoping this is one of them, things just get out of whack. So they're a sister of Nextera Energy, which is a great company. I'm hoping they are as well. All right, big shift. Hopefully it didn't throw you off too much, but the sun was driving me nuts again. So next on my list is Pfizer. I think you all know Pfizer. It closed the week at $28.41. Count value 568.20. We're down over the 5 weeks $10.93, but we're up week over week $21.32. I don't expect Pfizer to be some big high flyer, but I think they're out of favor right now. I thought the price was pretty cheap, and it goes along with my Peter Lynch, but I try to pay attention to prices as well. It's fallen almost in half, and it's still a great company. It's big pharma. They do drugs and all sorts of stuff, and they pay a really nice dividend right now, 5% and change. I don't expect it to double in a year or anything like that, but what I'm hoping is that it drifts and it's trading, $36 in a year or so, which is up 20% and really hasn't done anything, and nobody's going to really notice on top of paying its dividend. So I think it's a bargain right now. Maybe I'm wrong, but I do like Pfizer. Next on my list is Vertis something preferred stock fund. Its ticker symbol is PFFA. It's one of my favorites just for something that pays a nice dividend. It pays monthly, pays 16.5 cents, and it's trading at $20.46. Our total account value is $511.50. We're up $34, and week over week we were down $1.75. They have a big. They're essentially a ETF of preferred stock. I don't have any preferred stock in my own personal account separately, so I think it's a good way for me to get in that space. And I really do love that it pays a high dividend. I'm a bit of a dividend junkie, even though I know that in some ways that's a mistake. But in the long run, that's the type of thing I want to slowly shift into to help pay for life and when I retire. Next on my list is Qualcomm, which closed the week at 143.40. Total account value is $573.60. Our total profit in Qualcomm over the 5 weeks has been $55.84, and we were up $1.64 week over week. I've always had a thing for Qualcomm. I don't really know why. Pays an okay dividend. They make chips for phones. They essentially just lengthen their contract with Apple for a few more years, so that'll be a nice revenue at least for the next couple of years because Apple sells tons of phone, and I use that as well. Um, Next on my list is QSR Group. They're the one that I mentioned. It's Burger King and a few other companies mixed in for fast food, just a conglomerate. They also recently took on a new CEO maybe a year ago. It was the one who really helped Domino's grow the way that they did. I think they did 10x or even more while he was in. So I'm kind of betting on him to do well for these guys. Closed the week at $77. Our account value is $539. Oh yeah, we're up a total of $43.05 over the 5 weeks, and week over week it was up $19.32. It also pays a nice dividend as well, so I'm super thrilled to see when dividend stocks actually go up in equity too. Um, the next one has been the one that we're not doing so great in, but it's still a company I've loved. I've kind of been sucking wind on it for the past few years because I've had it a while in my other account, which is Starbucks. It closed the week at $95.24. Our account value is $476.20. Our total profits, which is a loss right now, of $41.55. And week over week, we were down again, $8.15. My only complaint is the market's been going up really well, and Starbucks is just struggling. They actually had really good earnings last time, so I figured it was like time they finally broke out of their range and would start moving up. It hasn't happened. It is what it is. I guess we'll see how it does over time. Second to last, just because alphabetical, is Exxon Mobil. I wanted to make sure that I had an oil company in here. It closed the week at 102.07 cents. Our total investment for the account right now is $408.28. We're down $14.04, and week over week we were up $4.56. I think Exxon's a great company in that space. I was trying to decide between them and Chevron. Um, I don't know why. I might as well flip the coin, but I assume you all know Exxon. The ticker symbol is XOM if I didn't say it. Oh, and for Starbucks, if I didn't say it, it's SBUX. And last but definitely not least is Zillow Group, which ticker symbol is Z. Anybody who's looked for a house, I assume you've looked at Zillow, which is part of why I like it as a company. I think a lot of the industry is going that direction, and it's one of my bets of like I hope it just does 10x or something crazy. And I don't mean over a year. Again, that is not some promise. You guys need to do your own research. I just think they actually might get market share of the real estate company business over time and slowly squeeze out realtors and mortgage people and title and everything else if they really have some direction, somebody pushing it that way. To, to tell you how nuts my brain is, I thought of reaching out to talk to them about it, but I don't know that I really have the energy or the time. Anyway, closed the week at $58.77. Our total account value is $587.70. So far, we've been really lucky with the timing. It's up $196.80 over the 5 weeks, and week over week, it was up $27.70. So the total account value now is $11,000, $154.80, and we started with $10,000. The profit is $1,147.37, and week over week we were up $195.97. Again, that's absurd for 5 weeks. To be up 11% in 5 weeks, the reality is I'd be happy with that if that took a year. I'm thrilled that it started out this way, but I do expect some down weeks. I guess we'll see how it plays out. Last year, the first 4 or 5 months of the year, the market really took off. And part of me is thinking that's what's going on again this year because I'm optimistic the market. I think there's enough negativity. People have moved out of equity and housing to get their guaranteed 5% in CDs and high yield checking or savings accounts. I have a feeling that that's not going to be the greatest deal ever because when I see a lot of money move into a certain product, I generally think that that's not the greatest route to go. I try to think a little bit outside the box, and I, I took my money out of those things and moved it into things like this for my own accounts. Again, you guys need to make sure you do what makes sense for you. I just try to go against the herd. I get a lot of pushback all the time about, well, that makes no sense. But it seemed to work out for me real well over the years, and that's why I like to share. So have a great day. Have a great Christmas. If I don't talk to you tomorrow, I'll probably be in the car driving. I'll try to do a video, but we'll see what happens. Going to Bryan Head with the family. My son's going to play with one of his friends, hopefully go tubing and all sorts of fun stuff. So, Merry Christmas. Have a great Sunday. Again, don't forget to hit the subscribe button or the like. If you made it this far, my God, thank you. I can't believe you saw it through boring me for all this time. Have a great day. Bye bye.